Tax enforcement is no longer limited to tax returns. Modern enforcement increasingly relies on financial surveillance systems originally designed to combat money laundering, terrorist financing, and organized crime. Today, agencies responsible for tax administration, financial intelligence, and anti-money laundering enforcement operate within a rapidly expanding network of data sharing and reporting obligations. Bank records, beneficial ownership databases, suspicious transaction monitoring, cross-border reporting systems. The lines separating tax enforcement, financial intelligence, and national security oversight are becoming increasingly interconnected. At the center of this transformation are FinCEN, anti-money laundering frameworks, and the expanding use of financial transparency laws. This is the rise of financial surveillance and tax enforcement. The Financial Crimes Enforcement Network, known as FinCEN, plays a central role in the modern financial surveillance system. Originally established to combat money laundering and illicit finance, FinCEN now functions as one of the federal government's primary financial intelligence agencies. Financial institutions across the United States are required to maintain anti-money laundering compliance programs and report certain transactions to the government. This includes currency transaction reports, suspicious activity reports, cross-border transaction records, beneficial ownership information, and Bank Secrecy Act compliance data. Although these systems were not created solely for tax enforcement, they have become increasingly valuable tools. The IRS Criminal Investigation Division works closely with FinCEN to identify hidden assets and offshore activity. One of the biggest challenges in financial enforcement has long involved anonymous ownership structures like shell companies and layered LLCs, which can obscure the individuals who actually control assets. To address this, regulators have focused on transparency. A major development came with the Corporate Transparency Act, requiring many entities to report beneficial ownership information to FinCEN. This includes identifying individuals who directly or indirectly exercise substantial control over a company or own significant interests. The objective is to prevent money laundering, tax evasion, and corruption. For tax enforcement agencies, beneficial ownership databases provide a powerful investigative tool. Instead of examining isolated transactions, investigators can map ownership networks across multiple jurisdictions. One of the most important components of modern financial surveillance is the Suspicious Activity Report, commonly known as the SAR. Banks are required to file SARs when transactions appear suspicious, involving unusual cash movements, structuring to avoid thresholds, or rapid movement of funds. Importantly, SARs do not require proof of wrongdoing. They are intelligence reports designed to alert authorities to potentially suspicious patterns that may lead to tax investigations. Anti-money laundering frameworks are now deeply intertwined with tax enforcement. Financial institutions conduct extensive Know Your Customer, or KYC, procedures, generating enormous amounts of financial intelligence. Artificial intelligence and data analytics allow authorities to identify transactional patterns across banking networks. As a result, tax enforcement is becoming more proactive and intelligence-driven. The expansion of financial surveillance also raises major legal and constitutional questions. Critics argue these obligations create unprecedented government visibility into private financial activity. As artificial intelligence and monitoring systems expand, the balance between enforcement efficiency and civil liberties will become increasingly important. The future of tax enforcement may depend on the legal limits society imposes. Modern tax enforcement is evolving into something far broader than traditional auditing. The age of isolated enforcement is ending. The age of integrated financial surveillance has already begun.